Welcome to our first FAR walkthrough video. I'm Logan, and in today's video, we're going to start off by going over preparing a classified balance sheet from a trial balance. And we're going to be doing that the SuperfastCPA CPA way, which is diving straight into questions to learn the material. If you don't know much about our strategies, make sure you go to SuperfastCPA.com and check out our free 1-hour webinar training. We go over the key ingredients to passing the CPA exams, and we will teach you how to pass your exams efficiently and effectively without wasting months and years of your time. The link will be in the description, so make sure you check that out. Also, just letting you know, we will be going over 5 questions in this video, whereas Superfast CPA members will have access to the full 10-question video when we post it in the members forum. So, if you like this, you can get more of it by becoming a Superfast CPA member. With all that said, let's dive straight into this first video. Alright, here we are at question 1. Given the following information from the trial balance of Zenith Corporation as of December 31st, year 3, identify the total current assets. Okay, it lists out a whole bunch of stuff from the trial balance. There's cash, there's accounts receivable, there's inventory, prepaid expenses, short-term investments, long-term investments, property, plant, and equipment, accumulated depreciation, intangible assets, and accounts payable. So these are all the things that it gives us. We, again, have to figure out what are the current assets of this corporation. Now, we're all in accounting. Hopefully you know what current assets are, but if not, that's okay. We're going to dive straight into the answer for this one just to give you a refresher. All right, here's the answer, $290,000 of current assets. So let's go over this. Current assets are assets that are expected to be converted into cash or used up within 1 year or within the normal operating cycle of the business, whichever is longer. They are essential for covering the company's short-term obligations and operating expenses. So here's a basic formula for calculating total current assets. Cash is always current. Accounts receivable, usually a lot of it is current, if not all of it. Inventory, prepaid expenses, and short-term investments. These are all typically short-term or current assets. So when you add those all up, the $50,000 of cash, $80,000 of accounts receivable, $120,000 of inventory, $10,000 of prepaid expenses, and $30,000 of short-term investments, you get $290,000. So not too difficult once you remember what current assets are. We're going to go over a few of the different categories in a classified balance sheet in this video, and just to kind of give you a start or a fresh reminder of where things go in the balance sheet before we go to the next video where we're going to talk about adjustments to the balance sheet. So let's go to the next question. All right, here is question 2. Which of the following best describes a classified balance sheet? Okay, so this whole video we're going to be talking about a classified balance sheet, but if you don't remember what that specifically means, then you might be kind of confused when you're doing the balance sheet and things like that. I just wanted to do a small question just to remind you what that is. So if you know what it is, that's great. If not, let's do a quick refresher. And the answer is a financial statement that groups a company's assets, liabilities, and equity into subcategories for more detailed reporting. Honestly, it's probably what you see in your day-to-day work. This is probably the most common thing that you typically see, just a normal classified balance sheet that shows you the different categories of the assets and the liabilities and the equity. A classified balance sheet is a financial statement that presents a company's financial position by grouping assets, liabilities, and equity into specific subcategories. This format provides more detailed information to users of the financial statements by categorizing items into sections such as current assets, long-term investments, property, plant, and equipment, intangible assets, current liabilities, and long-term liabilities. This helps stakeholders better understand the company's financial health and liquidity. So again, I just wanted to make sure that we know what we're talking about here. Basically, classified balance sheet is what you probably are familiar with most of the time. Now you know that's what it's called. Let's go to the next question. All right, here is question 3. Given the following trial balance for Horizon Tech as of December 31st, 2023, calculate the total assets and total liabilities plus equity. Identify whether the totals match up or not. So it gives us the full trial balance here, and the final question is, do the assets, liabilities, and equity balance? Basically, is the balance sheet correct? So this question basically is to test to see if you know where each thing is categorized. See if you can get the balance sheet to balance, and when you're ready, come back, we'll go over the calculations together. Okay, the answer is B. Total assets equals $700,000, liabilities and equity equals $700,000, so they do match, it does balance. So let's go over this. First, there's the assets. Total assets, pretty straightforward. Cash plus the AR or accounts receivable plus the inventory plus the prepaid expenses plus the net equipment. So you would take the equipment less its accumulated depreciation, and that gives you that $300,000 right there. So all this added up together equals $700,000. Then you go to the liabilities. There's the accounts payable, of $70,000 plus the salaries payable of $30,000 plus the notes payable of $90,000, and that gets you to $190,000 of total liabilities from this trial balance. Then there's the equity, which, as a reminder, is the common stock and the retained earnings. Those are the most common things that you see in retained earnings. So add those together, $510,000, and add the total liabilities and the equity together. That gives you $700,000. And remember, it's supposed to balance on the balance sheet, so assets are supposed to equal liabilities and equity together. So again, you probably know a lot of this stuff, but this is kind of the start of a long list of videos that we're going to make based off of the AI CPA blueprints, teaching each part of FAR. And this is the beginning, learning how to prepare a balance sheet. We're starting with the basics. Let's go to the next question. All right, here is question 4. Given the following information from the trial balance for Aurora Tech as of December 31st, year 1, calculate the total equity. So from the trial balance is giving us the common stock and the retained earnings, and then we have some additional information. During the year, the company issued additional common stock for $50,000 cash, and they had dividends of $40,000 that were declared and paid during the year, and the net income for the year was $90,000. Which apparently we have not accounted for these yet. So what is the total equity for Aurora Tech at the end of the year once we take into account this additional information? So this question is about equity. If you know how to do this, that's great. If not, let's go to the answer to remind ourselves. All right, the answer is $700,000. So let's calculate this. To calculate the total equity, we start with the initial equity amounts and adjust for the additional equity transactions. Additional common stock issued, that means that the common stock increases by $50,000. Going from $400,000 to $450,000. When we have dividends declared and paid, that's the important thing right there. These were actually paid. This reduces retained earnings by $40,000. And then the net income, we all know that that rolls from the income statement to the balance sheet in the retained earnings. So that increases retained earnings by $90,000. So adding this all together, the original retained earnings of $200,000 plus the net income of $90,000 less the dividends paid of $40,000, that gives us $250,000 of retained earnings. And then we add the adjusted common stock and the adjusted retained earnings together, and that gives us an ending equity of $700,000. Like I said, we're kind of going over each different part of the balance sheet in this video. Let's go to the next question. All right, here we are at question 5. Given the following information from the trial balance of Horizon Enterprises as of December 31st, 2023, identify the total current liabilities. Okay, so we've been over a whole bunch of different things. Now we have to figure out what the current liabilities is in this case. It's giving us all the liabilities, so which of these is a current liability? So pause the video, do the calculation if you need to, and when you're ready, come back, we'll look at it together. Okay, the answer is $135,000 of current liabilities. So let's go through this. Current liabilities are obligations the company needs to pay within 1 year from the balance sheet date. These are all obligations or debt that needs to be paid or taken care of within a year. So we take the accounts payable. Accounts payable is almost always current, if not always. Notes payable. This was due March 31st, 2024. That's only 3 months away, so that's current. Salaries payable, due within 15 days. That's also current. And the interest payable is due within 2 months, so that's also current. Everything else was past a year, so it's not a current liability. So we add those all together, $40,000 plus $70,000 plus $15,000 plus $10,000, and that equals $135,000 of current liabilities. All right, not too difficult of a topic. Again, we're just starting here. Before we go any further, let's do one more part of the process called pillar topics. Now, the idea behind pillar topics in the SuperFast CPA strategy is as you're going through the questions to learn the material, you will notice things that keep popping up, equations and types of questions that keep popping up. Like you might see like 4 or 5 questions teaching you how to calculate current liabilities in different situations. Or you might see different questions trying to teach you how to calculate equity in this case. Again, these are all things that keep popping up. They're obviously important, so you take a second and you write down pillar topics to help yourself remember the importance of these things. So let's go to the pillar topics for this video. All right, here we are at the pillar topics. And for these pillar topics, we're kind of just giving a reminder of what each thing is in the classified balance sheet, what each category is. So for current assets, these are assets that are expected to be converted into cash or used up within 1 year or within the normal operating cycle, whichever is longer. Examples include cash, accounts receivable, inventory, and prepaid expenses. Non-current assets are assets that are not expected to be converted into cash or used up within 1 year. Examples include property, plant, and equipment, long-term investments, and intangible assets. Now on the other side of the balance sheet, there's current liabilities. These are obligations expected to be settled within 1 year or within the normal operating cycle, whichever is longer. Examples include accounts payable, salaries payable, and short-term notes payable. And for non-current liabilities, these are obviously obligations that are not expected to be settled within 1 year. Examples include long-term debt, long-term notes payable, and mortgage payable. And finally, equity. This represents the owner's residual interest in the assets of a company after deducting liabilities. It includes common stock, additional paid-in capital, and retained earnings. And with that, that is the end of the video. Again, we were just getting started. This is the beginning of a whole playlist of videos where we're going to be going over each topic in the FAR CPA blueprints. So look forward to that. Before you go, make sure to check out our free 1-hour webinar training on SuperfastCPA.com. Again, we teach the key ingredients to passing the CPA exam. It's something you don't want to miss. Make sure you go check it out. And just a reminder, we only went over 5 questions in this video, but Superfast CPA members will have access to the full 10-question video when we post it in the members forum. So if you like this, you can get more of it and more practice by becoming a Superfast CPA member. If you liked the video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.